Okay, we've got to break down what was, without a doubt, one of the wildest days on Wall Street we've seen in a while. We're talking shocking earnings reports, a very nervous Federal Reserve, and some CEO drama that, honestly, you have to hear to believe. I mean, this quote just says it all, right? You've got one tech giant pulling in absolutely mind-boggling profits. At the same time, the CEO of another one literally tanks his own company's stock live on TV. It's the kind of day that defines an entire earnings season. So let's dive in and unpack how all this went down. So all of this chaos really kicked off with the earnings reports. They sent this massive shockwave through the market, and it instantly created this really clear divide between the day's biggest winners and its biggest losers. And right at the heart of it all was a true tale of two techs. You know, in one corner, you've got Meta Platforms, the parent company of Facebook and Instagram, and in the other corner, the legendary chip maker Intel. And boy, their fortunes on this particular day could not have been more different. Let's start with Meta. Just get a load of this number. In a single quarter, their net income was a staggering $14.7 billion. To put that into perspective, that is more than the entire GDP of dozens of countries, all earned in just 3 months. Just incredible. And that $14.7 billion, that's a 117% increase from the exact same quarter last year. So we're not just talking about a big number here. This is a sign of truly explosive growth, and it's being driven by massive improvements in their AI-powered advertising. So here's how the market actually reacted to all this. You've got Meta, which just crushes its estimates, and boom, the stock jumps 9%. Then there's Intel. Now, they actually beat their earnings per share, but their guidance for the future was so weak, it sent the stock plummeting 11%. And then there's Snap, a smaller player in the ad world. They missed their revenue targets and just got hammered, dropping 17%. A really brutal day for them. Right, so none of this happens in a vacuum. You know, these individual reports sent massive ripples all across the market. It ended up boosting some sectors while totally crushing others. And you can really see it here. Meta's amazing results lifted the entire digital ad world. Stocks like Google and the Trade Desk saw some pretty solid gains. But Intel's bad news? It did the exact opposite for semiconductors, dragging down competitors like AMD and NVIDIA. It was a classic case of a rising tide lifting all boats, or a sinking one pulling others down. And what's kind of funny is that despite all this drama, the broader market, the S&P 500, actually finished the day slightly up. And this was almost entirely thanks to the strength of the tech sector, which, powered by Meta, managed to outweigh all that negativity from the chip space. But while all this corporate drama was playing out, there was this bigger, more powerful force kind of casting a shadow over everything. And that was the Federal Reserve and its chairman, Jerome Powell. Now, the word of the day from the Fed was hawkish. And if you're not familiar with the term, it's pretty simple. A hawkish stance basically means the central bank is worried about inflation, so they're leaning towards keeping interest rates high to fight it. It's the complete opposite of a dovish stance, which would signal that, hey, rate cuts are probably coming. And this is the exact quote that moved the markets. When the chairman of the Fed says he is not confident about inflation, Wall Street listens. That one little sentence just poured ice-cold water on any hopes for an interest rate cut anytime soon. And the impact was immediate. I mean, before Powell started talking, the market was betting that the first rate cut would happen in July. After his comments, that expectation got pushed all the way back to September. That is a really significant shift in thinking. So why is the Fed being so careful? Well, it's because the data they're seeing shows the economy is still running pretty hot. The private payroll numbers came in way stronger than anyone expected. And a hot job market can lead to higher wages and more inflation, which basically forces the Fed's hand to keep rates high to cool things down. All right, let's get to what is maybe the most unbelievable part of the day. Seriously, forget the charts and the data for just a second. We're talking about pure, unscripted CEO drama playing out on live television. You just can't make this stuff up. The CEO of Intel, Pat Gelsinger, he goes on TV to try and calm down investors after that weak guidance. But right in the middle of the interview, he accidentally admits that they were losing ground to their biggest rival, AMD, in the super important data center market. The stock immediately dropped another 3% while he was still talking. An absolute disaster. Meanwhile, over in the Meta camp, a totally different kind of drama was brewing.
A slide from an internal meeting got leaked, and it showed CEO Mark Zuckerberg making this incredibly bold prediction that AI assistants will replace Google search within 18 months. I mean, that is a direct shot at Google's core business, and it just shows you the sheer scale of Meta's ambition right now.
And that really just leaves us with this massive question. Is Zuckerberg right? Is that even possible? It's such a bold, almost unbelievable claim, but given how fast AI is developing and how well Meta is doing, it's a question the entire tech world is now asking. So, after a day of these huge swings, CEO gaffes, and Fed warnings, where do we possibly go from here? Let's take a quick look at what you should probably be watching next. Okay, so these are the stocks on our radar. From Meta, the big question is, can this incredible momentum continue? For Intel, we're definitely going to be watching for any analyst downgrades. Keep an eye on the trade desk. It could ride Meta's coattails. And of course, Google, which now has to respond to Meta's direct challenge. And finally, there's the bond ETF, TLT, which is going to face some headwinds as long as the Fed stays this hawkish. A day like this really reminds you that the market is a battlefield. You've got these tech giants clashing, and the Fed trying to control this wild, unpredictable economy. And it all just leaves us with one final question. After all the dust settles from a day like this, who's really best positioned to win tomorrow?